going over to Western Australia, and we are going to hear about the Garden Gully Gold Project with Alex Passmore, CEO of Aura Gold. Please welcome Alex.
Good afternoon, and thanks to MiningNews Select for putting on such a great conference. So, standard disclaimer. So, Aura Gold, nothing to do with Ora Banda. Aura Gold Limited is the renamed from Thunderlara a couple of years ago. Thunderlara had spent many years building up a ground position in the Murchison region of Western Australia. So Western Australia has two substantial gold regions: the Eastern Goldfields, which is Kalgoorlie, Laverton, Leonora, and I guess encompassing Coolgardie, and in the Murchison region, which is Mount Magnet, Kew, Meekatharra. It's a belt that's about 400 kilometres to the west of the Eastern Goldfields. The big brothers in the region are Ramelius and Westgold, but there's a great group of juniors that are discovering new gold ore bodies in the area, and it's an unloved. It's historically been, I guess, unloved relative to the Eastern Goldfields. So there's 35 million ounces of past production and resource in the Murchison Goldfield, and it's fast gaining recognition. Aura Gold has a big ground position in the region, so 677 square kilometres, and we have a shallow high-grade resource at the Garden Gully Gold Project. So that resource is at a prospect called Crown Prince, and that's the first of many prospects that we hope will underpin a production scenario at the project. So the resource is 240,000 ounces at 4.1 grams per tonne, but that all sits within a coherent mineable shape. And so we very much see that resource as a cash flow type prospect. So Aura Gold's key corporate numbers, so 35 mil market cap, 4.3 million cash at the end of December, which gets us to where we need to be for the short term. We're well supported by our brokers, Argonaut and Canaccord, and you can see Argonaut Gold Fund is on the register there, and I see Ben's in the audience, so thanks, Ben. And we look forward to continued support from our shareholders. So just Garden Gully, where it is, and the belt that it sits in. So I'll just detail a couple of things on screen while we're going through it. So this belt here is the Abbott's Greenstone Belt, and that's relatively underexplored, or relatively it's less well known to the Meekatharra Greenstone Belt, which is here, which is where a lot of Westgold's assets are. And then we've got Meeka Minerals up in the top right-hand corner of this map, and then Odyssey further to the south. So the Abbott's Greenstone Belt has been under disparate ownership over the years. So St Barbara back in the 90s used to own this ground, and then as St Barbara's story got a bit more difficult in the late 90s, the ground position was broken up and owned by many different companies and prospectors. So we're focused on the Abernathy Shear Zone, which is running up in that position there, where I've just marked in red, and there's a series of gold deposits that occur along splays from the Abernathy Shear Zone. So very prospective, same age, same type of rocks as Meekatharra, and we're discovering new ore bodies there. So now I'll just take you through a fly-through of the region. So the tenement holders, as I was mentioning in that map before. So starting at the south, we've got Odyssey with their Tuckanarra project, Kew Gold operations owned by Westgold. Moving to the north, Meekatharra Gold operations, Great Boulder, and Meeka Minerals up to the northern end of the belt. And then flipping over to the western side of the Great Northern Highway, there's our project centred on the Mount Clare, Meekatharra Road. So we've got good infrastructure, serviced by public roads, and Crown Prince sits on a granted mining lease with native title agreements in place. And you can start to appreciate the scale of the tenement package that we've got there, relative to the size of our peers. So now we're just going to zoom into the Crown Prince prospect itself. So not far from a road, so easy access. So this is the drilling at Crown Prince. So anything that's highlighted in yellow here is above 1 gram. Anything in red is above 10 grams. And you can see here that most of the drilling is quite shallow. So this drilling was was mostly completed in the last 12 months and sort of defines two ore bodies, but they both sit inside a pit. So this is the southeastern ore body here, or southeastern zone here, and you can see that's been the focus of our drilling more recently. So that's 164,000 ounces at 5.2 grams, and with 80% of the ounces above 70 metres from surface. So certainly a high grade open pit proposition. And if I spin that round, you can now see a second ore body, which we call main zone. That was known historically, and so that fits into the same pit. So looking at our resource, so green is indicated, blue is inferred. So the inferred, there's a fair bit of inferred that can come into the mining envelope. Just needs further drilling. So we look forward to doing that in the coming months. So now we're looking at grade, the grade profile of the blocks in that resource, and you can see anything blue is between 1 and 3 grams. So given that here is around 135 metres below surface, you know, we can see an open pit type scenario through there that makes very good cash, and potentially an underground mine emerging below that. So so that, you know, Crown Prince might have a modest overall scale, but we can see a neat and tidy little operation sitting on a mining lease with native title agreements in place. So just looking at some geology, this is what the rocks look like, you know, in the more shallow weathered zone. So this is 33 metres at 24.5 grams from 57 metres. So you can see oxidised rocks, quartz veins, and very clean metallurgy as it happens. Then some of the deeper intersections. So down into the fresh dolerite. So down into the fresh dolerite there, with some very high grades, 16 metres at 34 grams, down at 146 metres. So once again, also seeing clean metallurgy there. Back to the northeastern end of the strike of the southeastern zone, oxide, and then we've just released yesterday this high grade hit, which is in that 1 to 3 gram zone of 15 metres at 10 grams. So we're growing the grade and the widths along strike, and also focusing on down dip extensions. So we can see plenty of upside to that 240,000 ounces from here. So we've been drilling since early February, and we look forward to resource upgrades throughout the year. Ore body's still open at depth, but you know, at the moment the along strike extensions are providing cheaper additions. Just for scale and for history's sake, I suppose there's some old workings in the area, so it's a disturbed site. So that will speed up our mining approvals when we progress down that path. So just looking at this resource in plan view now. So just in summary, so there's the 240,000 ounces across those two ore bodies, main zone and southeastern zone. The high grade southeastern zone is 164 at 5.2, and that's really what's transformed the economics of this project. We've got a very high proportion of indicated, so 70% of our ounces here are in the indicated category, and we'll aim to keep the resource going at that sort of at those sorts of ratios. So here's the shape of the ore bodies. So you can see those two distinct lodes there. Upside at depth, as we were saying. So now that we know that we've very likely got an economic ore body, what do we need to do to bring that into production and de-risk the project? And one of the key things for me was metallurgical test work. So if we're looking at either toll milling or using someone else's mill or buying a mill, we want to understand what we need to do to get that to de-risk that for other people, or to understand what sort of mill that we need. Now, pleasingly, over 70% of the gold came out in gravity recovery, and 98% in standard CIL. So very, very clean metallurgy, and would be amenable to any of the mills in the region. So from here, we will be focused on drilling along strike from that southeastern zone, and hopefully we're getting lots more of those high-grade, thick intersections. And then later on during this This half of the year we'll be looking at the deep drilling and very much that the ore body's not closed off at depth, and then putting out an updated resource towards the middle of the year or just after the middle of the year. We're also drilling on some key targets in our regional grounds. So we've got Lydia and Abbots, which also sit on granted mining leases, so they're key areas to look out for. And we believe that there'll be resources on those that are that can be included into any mine plan along with Crown Prince. So broadly, our plan is to build the project to scale so that it can support its own production centre. It is also obviously getting big enough to be of serious interest to some of the mills in the area that are lacking feed. So, we've got Westgold, which is operating plants nearby. We've also got Ramelius, 180 kilometres to the south. We've got Catalyst, 180 kilometres to the north. So, once with our grade profile, 4 gram dirt can travel a long way. And so our plan is to build the scale, understand the ore bodies, and then look at a production scenario there. Alongside of in parallel with growing the ounce profile, we also need to understand all the technical risks that go along with mining. So we're doing that. And then in terms of exploration, spice, well, there's some fantastic targets regionally that we're looking at. Thank you. Did you like that, Eddie?
Yeah. You do need to wait for the mic.
He was joking.
Thanks, Alex. Just can you give us an idea of what the spare mill capacity is in the region?
Yeah, sure. So, Bluebird Westgold is 33 kilometres away, so that's a 1.8 million tonne per annum mill. That's running, that's probably got 30 to 40% underutilisation at the moment. But that's a problem for them to solve. I guess Westgold would always say, well, we can fill it, it's our choice. We're just, we've got deposits around the place. That sort of seems to be the fact pattern there. And then I'm sure Catalyst Platonic could do with some extra feed. I don't think that's any surprises there. Then there's Andy Well and Burnacurra, which are both on care and maintenance in the area, and they don't need too much in terms of spend to bring them back into production. And then Ramelius Mount Magnet, while it's full at the moment with Penny West, I think looking a couple of years out, there's probably starts to be capacity. So for us, it's do you build your own? Do you try and do a sensible deal with someone? We have the ounces, they have the plant. There's always an interesting negotiation that goes along with that.